Welcome back to another video. Today we're going to be talking about a thing called swag, so stay tuned for more. If you're interested in becoming a pro trader, check out the link in the description for a 4-week trial. Enjoy, guys.
There is a basic trade that we call the classic fly, and it's a directional strategy where we place a out-of-the-money butterfly and such that the risk is no more than 10% of the width of the fly, and it's a symmetrical fly. We don't use unbalanced flies, we don't use broken wing flies, we use symmetrical flies. And our base level risk to reward, which is the debit divided into the max profit, is 1 to 9. So we're pushing this pretty far out of the money and making the debit 1/10 of the cost of the width. And this is a very common technique for discretionary floor traders on the exchanges when they were there in trading options. This is what they did. They called it the 10% debit rule. And it still exists to this day, actually. So this is our bread and butter trade that we do in the service. Now, if it were just as simple as that, then this would be a pretty simple service, right? Just put on one of those trades and then hope that you get profit. But the real art to this trade is in the profit management. And it's kind of a swag as opposed to an art. I wouldn't say art. Art is definitely the wrong word. It is based on science. It's a discretionary strategy, but it's also somewhat of a guess. I mean, sometimes you're faced with the prospect of potential huge profit or loss, maybe not so big loss because we're taking an asymmetric trade. And so you have to decide, is this the point where I hold or do I fold? If I hold and it goes into profit, I'll make a lot of money. If it doesn't, I could lose more money. If I fold, I could guarantee the unrealized profit that I have now, or it could keep on going up and I could have made a lot more and I would have been missing out. I could be experiencing FOMO, fear of missing out. These are decisions that you have to make. Now, you don't just want to guess at that decision. You want it to be some sort of continuous improvement process where you're slowly and methodically closing in on what are the optimal decisions that you should make. Now, this doesn't happen by looking at 1 or 2 trades. This happens by looking at dozens or even hundreds of trades and then evaluating your performance. It's not so much to do with the specific criteria that you're trading by, but it has way more to do with your performance, your execution performance, your timing, your analysis, a whole range of different things. Now, we call this a swag, and a swag literally stands for a scientific wild ass guess. Now, I think some of the places where this term was used first was, I think, by a general that used to be on TV. He was a general from the Korean War, and he used it to describe some of their tactics and the decision-making process that they went through. It certainly wasn't a guess, and he didn't mean to imply that, but he would do this in an open forum, you know, with the news, media, etc., and said that their swag was, right? Now, it was really based on very deep-rooted experience in warfare and maybe Sun Tzu's Art of War and all the other things that they put in together. That's what it was. It was, from a military point of view, it was a swag, a scientific wild-ass guess, based on their experience and real data. But ultimately, you had to make a choice. Do I hold or do I fold? Do I attack or do I retreat?
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.